is as follows. Today being the monthly expiry session, we can expect some volatility once again. In last session, we have seen that index ended almost flat at 22,547 levels, and this month as a whole, the index is down 4.27%. This is a fifth consecutive negative closing for the index, and the bias remains range to down, trading below 23,250 with immediate support at around 22,400 followed by 21,750 levels on the lower end. So the bias remains range to down. The only positive which we can see on the charts is that as per the daily charts, the index is trading at 34.75 RSI and close to 30 odd levels. It enters into an oversold zone. So intraday, if the index comes close to around 22,400 odd levels, one can look for buying interest. On the other hand, it need to sustain over and above 22,650 for any kind of short covering or fresh buying interest in intraday for the potential higher resistance of 22,800 and higher. Overall, the bias remains range to down, and we can only play and look for contra trading long bets at support levels with strict stop losses. The index need to sustain over and above 23,250 on a weekly time frame in order to nullify the ongoing pessimism and negativity, else the index slowly and gradually can drift down in days to come. As per the monthly OI data, the maximum call build-up in Nifty is at around 23,000 and 22,700 levels, while the maximum put build-up is at around 22,600 and 22,500 mark. So broadly 22,500 is important in intraday trading, above which the bias will remain range to downside capped with a potential pullback hurdle at around 22,700 levels in intraday. For intraday index players, dips towards 22,510 and 22,450 futures levels can be looked for buying, keeping a stop of 50 odd points, while hurdles come resistance and selling level will be around 22,680 and 22,750. Again, one need to maintain a stop of 50 odd points. In respect with Bank Nifty spot ended last session at 48,608 levels. The index is down almost 2%, which is outperforming Nifty 50 index. As per the price study, 47,500 remains important support, followed by 46,000 mark on the lower end, and on the higher end 50,000 remains a resistance. So trading below 50,000 mark and on immediate basis 49,000 levels, the bias remains range to pressure with the open lower level supports. As per monthly OI data for Bank Nifty, the maximum call build-up is at around 50,000 and 49,000 strike price, while the maximum put build-up is at around 48,500 and 47,500 levels. So 48,500 can be looked as a tug of war for intraday today. The index trading over and above 48,500 mark, one can expect some kind of pullback attempts towards 49,000 mark, which is an immediate resistance. But overall the structure remains range to down. And since last almost 5 months, we have seen that the index has slipped down from the highs of 54,000 to 48,000 mark, with an important support at around 48,000 for next few weeks to come. So 48,000 will be important tug of war level, but overall the bias need to sustain over and above 50,000 in order to nullify the ongoing pessimism in the index. For intraday traders, Bank Nifty futures 48,350 and 48,050 are the intraday buy levels, keeping a stop of 100 points, while 49,200 and 49,480 can be looked for contra trading short bets. Overall, as again mentioned, both Nifty and Bank Nifty continues to remain in a range to downside bias and is heading towards immediate oversold territory as per the daily RSI and other oscillators. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.